A very good morning, friends. I hope I'm audible to you.
Good morning, sir. You are audible.
Thank you very much for the confirmation. Right. So, first of all, welcome you all to the basics of accounting. I guess let me first introduce myself. I'm Kapileshwar Bhalla. I'm a chartered accountant by profession. And today I'm going to start with the basics of accounting with you. My core area of specialization is US GAAPs as well as IFRS and the Indian Accounting Standard. And I have also written a couple of books on the same area as well. But of course, the journey is starting with you in terms of giving you some basics of accounting today. Now, I think before we start, I think it's important to understand the audience as well, though we are connected online. But in any case, I think that doesn't deter me from asking questions to you. So I think the first thing which I want a little inputs on the chat box, if you can send me. I just want to understand your background. That how many of the participants are having some accounting background, who are learning accounting for the first time. That'll give me a little idea in terms of introducing the subject of accounting to you. So if you could just give me some inputs on the chat, I think that would be great. Though undoubtedly we'll start with the very basics. Okay, I get the very first message. I'm a CA, so I think undoubtedly goes without saying that you know accounting very well. That's great. So please share your inputs on the chat box. Indian CMA, I'm an AMCOM. Okay, I think majority of so far CS, MBA, chartered accountant, MBA. So I think most of you have already known accounting, but I'm getting a few people know accounting background. I'm a CA inter, I'm a company secretary. I completed my BCom in 2006. BCom, MBA, BCom. Good morning. Okay, so I think the majority seems to be, having some accounting background as well. Okay, that's wonderful indeed. A lot of you are CA intermediate as well, BBA in finance, MBA, NMIMS. Okay, that's wonderful. So I think except one or two messages, I think everybody knows accounting. But what I am going to do, it's going to be more of a refreshing course for you in terms of learning accounting. So I'm not going to teach you that academic kind of accounting, trust me. So in any case, if you know accounting, that's wonderful indeed. But we're just going to try to change your perception. Look at accounting with a very practical aspect. But of course, basics are basics. We will understand the basics as well. And anywhere between the discussions, you feel that you want to get some more insight, you've got some questions, please feel free to ask your question on the chat box, or you can even raise your hands. We can chat as well. Okay, that's great. So I think let's start the journey. Now, since I am given the inputs to start with the basics of accounting, so I am definitely going to start with some very, very basics indeed. Whenever I take these basics of accounting, it takes me down to my memory lane. When I started my journey in accounting, let me tell you, I'm a qualified chartered accountant way back in 99, and I did my 10 plus 2 in commerce. And then I did my graduation BCom honors from Delhi University, Shri Ram College of Commerce. And then I pursued my CA. So my journey has been in accounting all throughout. So whenever I take the basics of accounting, as I said, it takes me down to the memory lane. And I remember that the very first day when I learned accounting in school was we were given the definition of accounting. I am not going to give you the definition of accounting to learn it. The idea is not to give you the definition. Remember, the idea is not to give you the definition. My idea is to give you some more information through the definition. So definition is going to be used only as a medium to explain you the concept of accounting. My idea is not to teach you the definition. So please keep that in mind. As I'm discussing the definition, the idea is not to expose you to the definition at all. So what I'm going to do in the next couple of minutes, I am going to write down the definition of accounting, and you can note it down as well if you want. And I will not explain the definition for the initial few minutes as I write down the definition. So you can just copy it. Don't apply your mind as of now. We're just going to copy the definition. I'm just going to share my screen. Let me know if the screen is visible to you. right? I guess my screen is visible. The board is visible to you. Okay, that's wonderful indeed. So I guess I am now going to give you the definition of accounting. So I'm giving you the definition of accounting. Do not apply your mind at this stage. You just need to copy the definition. I'll underline a few key terms as well. So this is a definition which I was taught when I was in class 11th. The definition said accounting is an art. Underline the word art. It says of recording, it's an art of recording, comma, classifying and summarizing and summarizing. Underline the word recording, classifying, summarizing as one word. So it says accounting is an art of recording, classifying, and summarizing transactions and events. Transactions and events in a significant manner. In a significant manner. Underline the word significant manner. So accounting is an art of recording, classifying, and summarizing transactions and events in a significant manner, which are in part at least of a financial character, which are in part at least of a financial character, underlying financial character, and interpreting interpreting, underline the word interpreting, the results thereof, and interpreting the results thereof. So you can well imagine, how I would have crammed the definition when I was in class 11th without even understanding the definition. I even remember it after so many decades. But trust me, you don't need to remember the definition at all. The idea, again, the idea is not to teach you this definition. The idea is to give you a lot of information today wherein we can start understanding accounting from a little practical aspect point of view. So let me know, friends, once you have done with the definition. So once you're done, just let me know because I'll remove my screen and I'll be discussing a few things with you. By the time, I think I'll just, number the terms which I've underlined as well. I've underlined the term number one, that is accounting is an art. So I think I'm just putting that as one. Then I'm putting the second term which I've underlined, and that is recording, classifying, and summarizing, then significant manner, then financial character, and then interpreting. So basically 5 terms is what I have underlined. Right. Let me know once you're done. Okay, I guess I got a few messages. Done. Wonderful indeed. Okay, let me just read the definition once in a complete go. It says accounting is the art of recording, classifying, and summarizing transactions and events in a significant manner, which are in part at least of a financial character, and interpreting the results thereof. I'm just stop sharing the screen and I now want to discuss a lot of things with you. I know many of you are from the accounting background, so I think we can have discussions at a different level as well. You know, when I looked at the definition for the first time, And when we were given the definition that accounting is an art, I couldn't stop myself from asking a question to the teacher. And I'm going to put that same question to you today, and let's get some insights from your side, because majority of you from the accounting background. So I think I want to put the same question to you as well today. I told the teacher, ma'am, there are three fields. One is science, one is arts, and one is commerce. I did not take science for the reasons I thought, this is taken by the intelligent people. And I did not take arts. Sorry for what I'm going to, say. Don't judge me on that. I said, ma'am, arts is taken by people, not good at studies. So science is taken by the intelligent people, arts is taken by the people who are not that intelligent, and the people who want to take the midway in life, they take commerce. So I said, ma'am, you have given me a little shock today because I joined commerce and you said that accounting is an art. No, I said, ma'am, why do you say accounting is an art? Why don't you say that accounting is a science? Now, let me, also tell you one thing. These days, I read definitions of accounting has undergone a slight change, and people have, actually made a little change in the definition, and they say that accounting is an art and science. But I have given you the old definition itself, where it says that accounting is an art. So, may I take, the liberty of asking you this question? Why do you say accounting is an art? Anybody would like to give me some insight? Why do we say that accounting is an art? Okay, I got the first input, maybe because it requires taking decision. Great, that's a good input. I thought I'm going to get flooded with answers on that with so many people from the accounting fraternity. I thought, I'm going to get a lot of things. Okay, I get judgment, subjectivity, and creativity is involved. And because it requires judgment, storytelling on finance. I like that. Storytelling on finance. That's wonderful indeed. Okay, so I'm getting good inputs like judgment, creativity, and skills, and it art of identifying, taking business decisions. It's a type of a presentation, analysis, etc. Wonderful indeed. I think that's great. You know, as I said, the idea is not to teach you the definition. The idea is to give you a lot of other informations as well. So what I'm now about to tell you, I'll document that as well. Don't worry, we'll be making some notes also on this. So I think let me again share the screen. I'm getting a lot of input in terms of the word creativity. I don't know, creativity is to be interpreted in the lines of, something which is manipulative in nature. Or is that creativity something, which is on a positive side? I take it on a positive side only. Okay, so let me now share the screen again and let's, I think, share some information with you. Now, just hear me very carefully. I always tell people that accounting is based on what is called gaps. So I always tell people that accounting is based on gaps. I know many of you know what is gaps, but for the benefit of those who might be learning accounting for the first time, I think it's important for me to tell you that gaps is called generally accepted. I'm going to pen this down as well for the benefits of those who might be learning for the first time. So generally accepted accounting principles. Now, I'm very choosy in terms of using words because these words are important to understand the larger picture. So, accounting world over is based on what is called GAPS, generally accepted accounting principle. Every country has its own gap. I said every country has its own gap. And the interesting part is that there is a lot of gap in gaps. There is a lot of gap in gaps. This is the English word gap. I'll give you a very interesting example to understand that why do I say that there is a lot of gap in terms of gap. Let me give you a very interesting example. I'm sure you would have heard the name of the company called Mercedes-Benz. Can anybody tell me that this company belongs to which country? Because
German,
this is one, sorry,
Germany, Germany.
absolutely correct. Absolutely correct. This is a company which belongs to Germany. Mercedes Benz made their financial statements as per German gaps. It was a profitable company. Then they decided to follow the international accounting standards and they made their financial statements as per international accounting standards, what we call IFRS. And trust me, when they made their financial statements as per IFRS, the company became a loss making company. I'm not exaggerating, I'm giving you the facts. The same transactions captured as per German gaps, the company is a profitable company. And the moment they make their financial statements based on international accounting, the same company becomes a loss making company. I'll not get into the reasons at that stage that why it became a loss making company, but the net impact is the gap in gaps. So in this particular case, every country has its own gap, and there is a huge gap in terms of different gaps. Now, if somebody were to ask me that, okay, sir, give me a list of different gaps in the world, it's difficult to give you a list. It's difficult to give you a number that how many gaps are there in the world. But I can tell you one thing that, there are two major gaps in the world. If you look them from the point of view of the popularity, you can say that out of all the gaps in the world, I would say there are basically two gaps. One is US gaps and one is IFRS. So I think let me just come back on the board and give you some insights. Now you must be thinking, sir, so you've been discussing about accounting as an art. Where does the art come in? Don't worry, I'm just coming to and going to connect the dots as well. But I'm going to explain you that why accounting is supposed to be an art. But as I said, the objective is to give you a lot of knowledge through the definition. The idea is not to teach you the definition from the schooling point of view, because you've all entered into the professional courses. You would be doing, professional courses where I think getting a deep understanding of the concept is very important indeed. And I'm not going to teach you the primitive, the traditional style of schooling. We're going to learn things from the practical aspect point of view. Though have limited scope in terms of basics, but once we get into more advanced accounting, then of course we can talk a little more in terms of some technical accounting. So if I were to segregate and decide that, okay, based on the popularity, if I were to segregate, the two most renowned gaps in the world, I would say one is called US gaps. And the other one is what I would say IFRS. It's called International Financial Reporting Standards. I put it again for the benefit of those hearing for the first time. IFRS, that is International Financial Reporting Standards. And let me tell you, my core area of specializations is both the gaps. I thought, one should have understanding of most popular gaps in the world. Now, as the name is suggestive, US GAAP is supposed to be applied in USA, and IFRS is supposed to be applied. Typically, it originates from UK. Typically, it originates from UK. Now, if somebody were to tell me that, okay, give me some main difference between the US GAAP and IFRS, I am choosing the word very carefully. I would say US GAAP is supposed to be largely. I did not say completely. I said largely. US GAAP is largely rule based. It is largely rule based. And if you ask me that IFRS is largely, I would say principle based. I would say it is largely, you can say principle based. Now, the immediate question which will come to your mind is, what do you mean by a rule based and a principle based accounting? I think let's understand the difference between a rule and a principle. But as I said, I'm not saying that IFRS does not contain rules. It does. I'm not saying that US GAAP does not contain principle. It does. But we are saying that it is largely rule based or it is largely principle based standard. Now let's understand the difference between a rule and a principle. I think rather let's keep it a little more interactive. Why should I be, continuously speaking for, a couple of hours? Would anybody like to tell me the difference between a rule and a principle? So deviations are not allowed under rules. I like it. That's wonderful indeed. Deviations are not allowed. I love that part of the definition. Rule base is restricted. That's great. Wonderful indeed. I think we're getting some good insights. Wonderful. Rules follow what is told. Rules have exceptions. Principle is supposed to be followed. I think that seems to be the other way around. Okay. Anyway, that's good input. Principles are judgment based. Wonderful. Let me, I think, give you a story because, accounting finance is all about storytelling as well. So let's do one thing. Let's give you a story today in the morning. And based on the story, you need to tell me that where is the rule and where is the principle. Let's take a very simple example, which I always tell people that let's say I am driving my car on the Indian roads. I'm driving my car on the Indian roads where the driving speed is, let's say, 90 kilometers. The driving speed is 90 on the Indian roads. Now, let's say the driving speed is 90 and I am driving at the speed of 80. Do you think the traffic policeman will challan me? The speed limit allowed is 90 and I am driving at 80. Will they challan me? And you're absolutely correct. No. Okay, let's say if I'm driving at the speed of 91, what is the possibility of being challan? Less likely or more likely? 91, just a little deviation, 91. Can I say again, less likely? That's great. And let's say if I'm driving at 100, the possibility increases, right? Then I would definitely get challan because if I'm driving at 100, that seems to be quite a deviation. Then it's more likely that I would get challan. Great. Now let's take another example. Let's say I am driving on the international roads. If I'm driving on the international road and let's say the speed limit is 90 and I am driving at 80, will they challan me? Let's say I'm driving in an international country. And I think some of you are saying no, and some of you are saying yes. Then let me tell you, the answer is yes. You drive below the speed limit, you're challan. That's what you call a rule or a principle. When you say 90, 90 means 90. So is that a rule or is that a principle? When you're telling the person 90 means 90, and that's absolutely correct, it becomes a rule. Somebody very rightly said that rules are something which need to be followed and there are no deviations allowed, but yes, there might be exceptions which might be given. So US GAAP is quite largely rule-based, accounting, where they tell you at various places, okay, if this is the situation, this is the accounting. If this is the situation, this is the accounting. But that does not mean that there is no scope for judgment. Please do not undermine the aspect of US GAAP by telling you that they're largely rule-based. That does not mean that there is no scope of judgment. It's a blend of rule as well as principle. But when you look at IFRS, there is a lot of application of judgment. Now, I'll give you, a simple insight which will further illustrate the picture. This is for your knowledge now. If you look at US GAAP, it is running in, let's first talk about IFRS. If you look at IFRS, it's running in almost 1,500 pages. The accounting standards which are given in IFRS is spread around 1,500 pages. And if you look at US GAAP, the same could be spread around 10,000 pages. So you can imagine that a GAAP is giving you guidance which is almost 6x. So you must be getting scared now at the stage that many of you must be planning to do a CPA and you must be thinking, oh my God, in terms of US GAAP, I'm going to learn, understand those 10,000 pages? Undoubtedly, no. Of course, they'll give you exposure in terms of certain main core standards, and that also you don't get into in depth in terms of every standard as well. But it's fun learning IFRS or US GAAP. So let me just come back on the picture. So I think now we have understood in the Indian example, when I said that the traffic policeman will decide that if you're driving below the speed limit, whether he will challan you or not, he is applying judgment. So principle-based standards will require the application of more judgment. It will apply more judgment in this particular case. When they become largely principle based, more judgment. Rule based would mean judgment is there, but there might be little less judgment, comparatively a little less judgment in terms of rule based accounting. So when I say accounting is an art, the reason is accounting is based on a blend of rules and principle, and therefore you need to apply judgment. So accounting is an art because it requires the application of accounting principle, and it requires a blend of, you can say, rules and principle, and therefore it requires judgment. Now, I would make a statement at this stage. Does this mean that in a given accounting situation, two accountants could give two different answers? What do you say? And maybe both might be equally correct. Is there a possibility that, in a given accounting situation, two experts evaluate the situations and they give you two different answers? Yes, it does. I've seen that in practical life many a times. Two different experts evaluate the situations and they give in two different opinions, and it seems that both of the opinions seems to be absolutely fit. There's nothing which you can say that this is incorrect and this is correct. It's not basic accounting, it is advanced accounting. I hope, friends, I have now made myself very clear that if somebody says that accounting is an art, then I think that accounting is an art means that it requires a blend of principles and rules, and therefore it requires judgment. I stand clear on the concept of accounting as an art. Any questions on your mind so far? Are we good to go ahead on the next phase? So the idea was not to tell you that accounting is an art. You would have understood. The idea was to tell you that there are two major gaps in the world. The idea was to tell you that which gap is rule based and which is principle based. I have got a habit as well. I don't know it's good or it's bad, but I keep asking people a lot of questions. You must have realized that in the last half an hour as well, that this man puts a lot of questions. And I keep putting some rapid fire questions early in the morning to ask you a few questions. Is that a good habit? I think yes. Your endorsement would make me feel good. Okay, I quickly get the inputs yes on that. That's wonderful indeed. Okay, so that's great. Now let's go on to the next area of discussions with you. We've understood accounting is an art. Now, as I see the next part of the definition, it says it's an art of recording, classifying, and summarizing. Now, let me just, I think, come back and explain a bit more inputs to you. Accounting world over. I said accounting world over. As I said, I'm very choosy in terms of using words because they should connote only a single clear-cut clarity. Accounting world over follows a certain sequence. Accounting world over follows a certain sequence. The sequence is the very first document which we prepare is called a journal. The second document which follows a journal is called a ledger. The third document after the preparation of a ledger is called a trial balance. And the trial balance becomes the base of making what is called financial statements. It is called financial statements. So we can say that when accounting is done anywhere in the world, When accounting is done anywhere in the world, it follows a certain sequence. The sequence is a journal, ledger, trial balance, and financial statements. I know many of you would already know this, but the idea again is to tell you something different. Now, so just to give you a clarification, is it possible to make a ledger without a journal? The answer is no. Is it possible to make financial statements without making a trial balance? The answer is no. So does this mean that this will be a strict sequence in which the company would do accounting? Yes. There is no deviation which will be allowed in terms of this. So let's quickly put you a question. Does this mean that this is a rule, or do you think this is a principle that you are saying that accounting needs to follow this sequence anywhere in the world? And no deviations will be allowed on that. So does that become a case of a rule or a principle? And that's rightly said. It becomes a rule. Wonderful indeed. Now let me introduce you to some more inputs at this stage. When you look at the concept of a journal, ledger, and a trial balance, and I'm keeping the financial statements at the other way. I'm dividing my inputs in terms of two parts: a journal, a ledger, and a trial balance. A journal, ledger, and a trial balance is what we can technically say are internal documents. What I say are internal documents. Now we'll understand what is internal documents, no worry. And when you say financial statements, the financial statements are what we call them as external documents. What we call them as external documents. Now you would say, what do you mean by internal and external documents? I'll explain. When I say internal documents, this means that these documents cannot be accessed by the public at large. But when you say external documents, then these documents can be accessed by the public at large. Internal documents could be accessed by only certain restricted people. Let's say, for example, as an auditor of the company. Let's say, for example, as a director of the company. I will have access to the journal, ledger, and the trial balance of the company. But let's say, for example, as a normal person walking on the road, you cannot access these documents. They are internal documents in nature, not accessible to the public at large. But when you're looking in terms of financial statements, they are external documents. When you say they're external documents, they can be accessed by the public at large. Now, let me ask you a few questions and give you some few insights on that as well. Let's say, for example, if I look at the Indian context, I'm saying if I look at, for example, the Indian context. Now, in the Indian context, let's say I want to access the financial statements of a private company which is not listed on the stock exchange. Can I access the documents of a company which is not listed, a private company? Do you think I can access the financial statements of a private company? And I'm getting a big no on that particular case. But I said it is a public document. And if it is a public document, then in that particular case, it should be accessible. And let me tell you, you can. If you want to access the documents of any company, financial statements of any company, you can just go to the MCA, Ministry of Corporate Affairs in India, and you can access the financial statements of any company, even if it is private in nature, except that you'll have to pay 100 rupees to access those documents. Wow, that sounds good information. So on a lighter side, if I want to access the financial statements of, let's say, for example, Simanda, sorry for the bad example, do you think I can do that on the MCA portal? Many of you might get excited to look at the MCA portal today. So what is the answer? So if I want to look at the access the financial statements of, let's say, Simandar Education, do you think that would be accessible and I could go to the MCA portal and access them? Nobody gave me an answer yes on that. It's on record, we are on recording so far. So do you think it would be accessible? Nobody said a yes or no on that. Okay, I think I presume your silence. I got the answer on that. The answer is yes, of course. Any documents which are supposed to be financial statements, whether it's a private company or a public company, can be accessed. Okay, so this is one input which I wanted to share with you, and therefore I said that these are internal and these are external documents. Did I speak anything technical so far? I don't think so. But I think, let me still ask you, did I speak anything technical so far? Did I give you anything technical stuff at this stage? Okay, that's wonderful indeed. I got some inputs. No, so you didn't speak anything technical. And somebody's telling me, yes, that's on the scary side. Okay, so I am now coming to more discussions. I'm not interested in discussing, the concept of journal, leisures, trial balance at this stage. But let me tell you one thing further at this particular stage. When I use the word journal, when I use the word journal, and when I use the word leisure, and when I use the word trial balance, as we were reading the definition, it said that accounting is the art of recording. The word recording goes with the word journal. Classifying goes with the word leisure. Classifying goes with the word leisure. And summarizing goes with the word trial balance. So this is just to connect the dots, that when you're looking at the word, that accounting is the art of recording, classifying, and summarizing. It is basically making a journal, leisure, and a trial balance. We'll be learning the art of making journal, leisures, and trial balance later. But I think before that, what I want you to expose is on the concept of financial statements. So, as I'm now discussing the concept of financial statements with you, I have now something to tell you. When I look at the word financial statements, there are a total of three questions which comes to my mind. There are three questions which comes to my mind. The question number one which comes to the mind is that when you say financial statements, what are the elements of financial statement? The second question what comes to my mind is that when you say financial statements, is there any kind of a format which is followed for financial statements? And the third question which comes to my mind is that when you say financial statements, is there any guidance which is, gives me how to make financial statements? So I've got three pertinent questions in mind. Why I'm putting these three questions? It is one thing which I remember, though we are studying basics of accounting, but my belief is that, you should study in a manner that everything gets chronologically, embedded in your mind in a sequence. Because today the time is of AI, the time is of artificial intelligence. And I think considering AI as, most prominent these days, your thought processes need to be tuned in parity with the AI. And I'm going to give you a lot of stuff, as we move forward. I'm going to give you a lot of stuff which is going to help you think on a very chronological order. I have something, which I create as three-step models. Okay, so I'm already getting some inputs regarding the guidance, the formats, etc., etc. That's wonderful indeed. But we will talk in terms of the international level as well, including India. But the inputs given, absolutely appreciated and correct. Okay, so as I said, when you're looking at the concept of financial statements, there are a total of three pertinent questions which comes to my mind. So I'm mapping your mind that when I'm looking at financial statements, by the way, let me ask you, do you think we are actually studying the definition? Or do you think we are using that as a tool in terms of understanding a lot of aspects in terms of the framework of accounting? What do you say? Are you getting the feel of the definition? Or are we looking at the framework in terms of things, right? I'm just using the definition as a tool to put in some things in your mind at this particular stage. Good. That's wonderful indeed. Of course, there are a lot of things which many of you would already know because most of you, majority are from the accounting background. So all this stuff is, very basic indeed. But I'm just trying to, organize that stuff in your mind in a little more chronological order. That's a modest attempt. So when I look at financial statements of the company, there are three questions which comes to my mind. So let's discuss those three questions one by one. One is we can say what is included. We can say the elements of financial statements. The second is the formats of financial statements. The third is the guidance. The third is the guidance. Because when you look at financial statements, your mind needs to be very tuned that, okay, I should know what is included in financial statements, the elements, what kind of formats are there, and what kind of guidance is available. So let's talk of these three questions one by one. Let's first of all talk about the elements of financial statements. So I guess I was already getting some inputs. So let me first ask you, give me a number, not the names. Give me the number, not the name. Financial statements include how many elements? Give me a number. Okay, majority is giving me the element 4, but I think one or two answers were on 3 as well. But that's right, there are 4 in elements in number. One is what we call a balance sheet. And technically, the balance sheet is called with a nomenclature SOFP. Don't worry, I'll document that as well. SOFP, that is called a statement of financial position. The common word is a balance sheet, but the technical wording is what we call a statement of financial position. The second one is what we call an income statement. The technical word is called SOCI. That is called statement of comprehensive income. This terminology is what I'm using, is used both for US GAAPs as well as IFRS. Don't worry, I'll pen that down as well. The third one is called a cash flow statement. The third one is called a cash flow statement. And the fourth one is what is called notes to accounts. Notes to accounts is not something, which is something like a document. We'll understand these elements in detail as well because I will give you some insights, some basic insights today itself. As I said, the idea is that people who might be exposing to accounting for the first time, the idea is that they also understand things well. I know some of you must be, saying that this is baby stuff, mommy. Of course, I understand. I appreciate that. But there are many people who might be learning for the first time. So let's, I think, take you to the journey. So when I say the elements of financial statements, I would say there are basically 4 elements of financial statements. One is called a balance sheet. One is called a balance sheet. This is a most common word. You can definitely use this term in the exams as well, but the technical term is what we call SOFP. That is called Statement of Financial Position. It is called Statement of Financial Position, SOFP. Then there is something what we call an income statement. There is something what we call an income statement, and that is what we call SOCI. That is called Statement of Comprehensive Income. It is called Statement of Comprehensive Income. Now, we'll not get into why is it called a statement of comprehensive income, but one thing I would definitely like to say at this stage, let's not call it as a profit and loss. Let's not call it as a profit and loss because trust me, profit and loss is just one element. Profit and loss is just one element of the SOCI because you're going to learn later that the statement of comprehensive income is got 2 parts. One is a profit and loss, and the other is supposed to be other comprehensive income, what we call OCI. I think let's not get into that. The idea was just to, put some terms in your mind. So we'll not call it as a profit and loss. It'll be better to call it as an income statement, or we call it as a statement of comprehensive income. The third is what we call a cash flow statement. The third is what we call a cash flow statement. In short, we call it as CFS. And the fourth one is what we call the notes to accounts. The fourth one is what we call notes to accounts. But you see, the names are not enough. I need to get a little more understanding with reference to, a very basic input. What kind of information does these documents give you? And that'll also give me a connection in terms of, as we proceed, what kind of discussions we're going to have as well. Because we're going to spend almost around 5 lectures or so in terms of understanding the larger picture of these elements. So let's take the journey forward. So what I'm now going to do, I am going to give you a very basic exposure, and I am going to understand for each of these elements of financial statements. So I want to understand for each of these financial statements, like for example, a balance sheet, like for example, for an income statement, as well as for a cash flow statement, I want to understand three things. And for the notes to accounts, I want to understand two things. Number one, what kind of information do these documents give me? And number two, these documents are prepared when? When do we prepare these particular documents? So I want to give you exposure on a very basic understanding that these documents gives you what kind of information. That's one. And these documents are prepared on which particular date. Now, as far as a balance sheet is concerned, I always tell people that balance sheet will tell you what you own and what you owe. In simple words, I always tell people that a balance sheet is a document which gives you information with regard to what you own and what you owe. And I think for those who know accounting can easily tell me what you own is technically called what? What you own is technically called what? Wonderful. That's called assets. And what you owe is technically called what? And that's wonderful indeed. It's called liability. So the balance sheet is going to give you information about assets, it's going to give you information about liabilities, what you own and what you owe. That's what in common words is. So our next area of discussions will be understanding what is an asset, what is a liability. If you want to understand how to read and understand a balance sheet, you need to understand very clearly what is an asset and what is a liability. So we'll get on to the concept of accounting terminology. Now, a balance sheet is always prepared as on a particular date. A balance sheet is always prepared as on a particular date, in the sense, in India, we follow the financial year April to March. I said in India, we follow the financial year April to March, but internationally, whether it is in UK or it is in US, we follow the financial year January to December. That's right, we follow the calendar year as the base. So when you make a balance sheet, it is made as on 31st December. The assets and liabilities are a figure which is a position on a particular date. And that's why we call it as a statement of financial position. That as on a particular date on 31st December, what is the position of assets and liability? What do you owe and what do you own on a particular date? So the balance sheet of a company is always prepared as on a particular date. Next, an income statement will give you, basically, you can say, the profit or loss earned by a company. And it's a profit or loss. When you calculate a profit or loss, the profit or loss is the total incomes of the company minus the total expenses of the company. From the incomes, you reduce the expenses and we get a profit or loss. So it takes care of all the incomes during the year minus all the expenses during the year. So it is always prepared for the year. It's prepared for the entire year. Because in the income statement, you will capture In the income statement, you will capture, you can say, the incomes for the entire year, the expense for the entire year, and compare them and get the profit loss. If the incomes are more than the expense, you get a profit. If the incomes are less than the expense, you get a loss. So you are going to get a profit or loss from the income statement. So we need to understand what is income. We need to understand what is expense. So I think I've got four accounting terminologies already in front of me. So I need to explain you what is an asset, what is a liability, what is an income, and what is an expense. So we'll understand that. Once you start understanding asset, liability, income, and expense, trust me, you are able to understand, read a balance sheet and an income statement. Next, Next comes the cash flow statement. So when you look at the cash flow statements in this particular case, when you look at the concept of the cash flow statements at this particular stage, just a second. Oh, my board, I think, is got. Oh. So when you look at a cash flow statement, the cash flow statement is going to give you information about, you can say, inflows and outflows of cash. It'll give you inputs about the inflows and outflows of cash, where the money came in and where the money went out. It's like a bank statement. If you ask me technically, it's more like a bank statement, which is going to give you insights in terms of where the money came in, where the money went out, irrespective, whatever might be the nature. I just want to get the information, inflow, outflow. And even a cash flow statement is prepared for the entire year. A cash flow statement also gives you information with reference to the inflows, outflow for the entire year, January to December. Notes to accounts. Okay, now comes a quick questions to you. Many people from the accounting background, I think now I get an opportunity to put a question. Notes to accounts is nothing but it is explanations. It is explanations of certain things which the management wants to elaborate, which is in the financial statements. Now, a quick question, friends, to you. Tell me, explanation in which documents? Explanations would be in terms of which documents? Is the explanation going to be in the balance sheet, income statement, cash flow, all the three? Or is it balance sheet only, or is it income statement only? So think about it. So when you're looking at the notes to accounts, are you looking at the financial statements, all the three? I get the answer that it includes all the three in this. Let me ask you a simple question, friends. Have you ever seen a practical financial statements? Give me a very candid and a true reply. Did you ever see the financial statements of any company on a practical level? Many people are saying yes. Okay, let's do one thing, friends. You want me to show you a practical financial statements at this stage where you can see the notes to accounts and get a correlationship at this stage? Yes. Okay, so let's do one thing. I'm going to share the financial statements of an Indian company for the time being. So I think, give you, let's say, the financial statements of ITC. Just give me a second. I'll just share that on the screen to you, and we can have a little look in terms of notes to accounts. So let me just, I think, open the financial statements, and I'm now going to share this on the screen, and let's see what do you see in this case. Now, this is the financial statements made as per the Indian GAAP, but it is as good as IFRS. Do you see the note number 3A, 3B, 3C, etc.? I'm sure you will look at the notes number 3A, 3B, and all those number. So that means balance sheet is containing notes, correct? There is an income statement which is also giving me the notes, correct? And then there is another document which is a cash flow statement. Do you see any notes? Do you see any notes on the cash flow statement? Let's put the question back again to you now. The notes to accounts is going to give you explanations on which document, a balance sheet, income statement, cash flow, all the three, or just the first two. Seeing is believing. Trust me, seeing is believing in nature. So I generally always prefer that when I, take inputs on any gaps, IFRS and US gap, I always try to connect people to the practical world as well. It is always important that whatever you learn, you should always try to connect and see. Seeing is always believing as well. Wonderful. So I think let me just put that pen that down as well. So when you're looking at the explanation, can I say this explanation is for items in the balance sheet? This explanation is for items in the income statement, not the cash flow statement. And what kind of explanation do you need for a cash flow statement? When I am making a cash flow statement, I am outrightly telling the people this is where the money came in, this is where the money went out. So, what further explanations would be required in this particular case? Of course, not. Wonderful. So, I hope, friends, you're able to get all the dots connected. Testing time. Are you ready for some rapid fire questions? We've crossed 1 hour, and I think I didn't realize how this 1 hour easily passed by. So, testing time. Ready for some rapid fire questions to you? Okay, that's wonderful indeed. And I generally keep the classes short. I'm not going to take you. So, but maybe, okay, I just missed the line. Somebody had a question. So maybe jumping, but notes will be also included off balance sheet, right? Yes, you can call them as off balance sheet. You can. Because unlike a balance sheet, income statement, cash flow, which are documents, which are, formats, there is no format for notes to accounts. It basically contains explanation of items which management wants to elaborate, which is on the balance sheet or in the income statement. Okay, so as I said, we're not going to keep the class very long as well. I just keep it on 1.5 hour because I think 2 hours gets a little more monotonous in nature, especially when we're doing basics. Unless it is more advanced, then I think it makes more sense to have an extended version. Okay, so let's begin the journey. Let's start putting some questions to you. I want to see answers flooded on the chat box, right? So I want to see your answers getting flooded on the chat box in this case. Please share your screen for a second. Oh, yes, I'll do that. So this is the elements, and you should know that which element contains what, and they're prepared on which date. This answers only the very first question which I gave you. We get to discuss the formats and the guidance part as well. Okay, so let's begin. Great, you're most welcome. Now, rapid fire questions coming to you. Accounting is rule based, principle based, or both? Maybe in different proportions, but is it rule based or is it principle based or both? That's great. Accounting is both principle and rule based. Wonderful. Next, is there a particular sequence in which accounting is done world over? And that's yes, wonderful indeed. Give me the name of the third document. Give me the name of the third document. I did not say element of financial, third document. That's right, it's trial balance. The third document is supposed to be a trial balance. Okay, what is the name of the document which is open to public domain? The generic name of the document which is open to the public domain. That's right, it's financial statements. Wonderful indeed. Now I'm going to give you inputs. You need to give me the name of the document. Give me the name of a document which is prepared on a particular date. The name of a document which is prepared on a particular date. Wonderful. That's called a balance sheet. Lovely. Give me the name of two documents which are prepared for the year, for the entire year. The two documents which are prepared for the entire year. That's right, a profit and loss as well as a cash flow statement. Now you need to give me a true and false. Notes to accounts gives you explanations on cash flow statements as well. Notes to accounts gives you explanations on the cash flow statement as well. That's false. Wonderful indeed. So I think we have wonderfully understood the basic essence of things. Accounting is an art because it requires a blend of judgment, rules, and principle. It is an art of recording, classifying, summarizing, journal leisure trial balance, and that is all done in a significant manner, which means a sequence. Okay, that's great. Now let's go to the second discussions on the financial statements. After understanding the elements, the next part is now to understand the formats. Now it is to understand the formats of financial statements. I'll tell you, when you look at the formats of financial statements, the format of financial statements is included in the guidance. It is included in the guidance, which is my third area of discussion. As I said, in financial statements, we're looking at the elements, we're looking at the formats, and we are also looking at the guidance. The formats are included in the guidance itself. Like, for example, if you ask me the guidance in terms of IFRS, the formats are given in IAS 1. And let me also tell you, IAS 1 talks about presentation of financial statements. IAS 1 talks of presentation of financial statements. Quite recently, IAS 1 is being replaced by a new standard, that is IFRS 18, which is going to be applicable, which will become applicable with effect from 1st January 2027. The formats of financial statements in IFRS is undergoing a change. The formats of financial statements is undergoing a change. So if somebody tells you that formats of financial statements in IFRS is given where, you can say presently. Presently, they are contained in IAS 1, and it is going to be replaced by IFRS 18, but the new formats will become applicable from January 27. If you ask me the formats in terms of US gaps, it is given in what is called ASC, ASC 205. It is given in terms of ASC 205, and there are more. I would say rather it is contained in the ASC 200 series. It is contained in 200 series. Can I take the liberty of giving you some extra knowledge at this stage? You've got the full right to say no. And you've got the full right to say a yes as well if you want some extra knowledge as well. Because I believe a lot of people are from the accounting background, so they're expecting something more than basics in life as well. True. Knowledge is undoubtedly always helpful indeed. I'll tell you one thing now. I'm just blending my discussions on the formats and the guidance as well, though what I'm telling you is more on the guidance. But since the format is also given in the guidance, the way the guidance in IFRS and US GAAP is organized is something really wonderful to watch. How many of you are planning to do a CPA, or how many of you are planning to do an ACCA or a CMA? So can we get some quick insights? Because I think that will also help me to give you some inputs. Okay, majority seems to be CPA. Wow, wow, wow. That's wonderful indeed. Okay, somebody said CPA plus an IFRS as well, but I think majority is planning to do a CPA. That's great. So I think give you a little inputs in terms of the initial part as well. If you look at the guidance in terms of IFRS, it is organized in terms of what we call IAS and IFRS, International Accounting Standards and International Financial Reporting Standards. But if you look at the guidance in terms of US GAAP, it is organized in terms of what we call ASC, that is called Accounting Standard Codifications. Since majority of you are going to do a CPA, do you want me to take you to the site on the standards and give you some more insight on the ASC? Very basic, not to keep it complicated, but to give you a very basic insight, which I think every CPA should know. Yes, that's a wonderful idea. Okay, so just give me a second. Let me just open that site to you. So you get a little feel, you can always go back to that site and start looking at some information for your later use as well as a qualified CPA or maybe otherwise as well. So I'm taking you to the site of what is called FASB. It's called FASB. And I'll tell you what exactly is FASB. Let me just open the site and we are going to go further. You need to first, access that site, accept the cookies, terms and conditions, then only you can go further. Otherwise, they don't allow you to go further. Okay. So before I share the site to you, I am just also going to give you something a little more further. Let me just share the board and then I'll come back to the site. So this is as far as the formats is concerned. I guess let me also give you a little more insight before we, go further on this. This is for your knowledge sake, which I think every profession should know, whether you're doing a CPA or you're doing an ACCA. I think this is something which, everybody should technically know. If you look in terms of IFRS and if you look in terms of US gaps, if you look in terms of IFRS, there is a accounting standard body. There is an accounting standard body. So IFRS is made by a body which is called IASB, International Accounting Standard Board. International Accounting Standard Board, which is a body which creates IFRS. And US GAAP is created by a body which is called FASB. We call them as FASB. It is called FASB, that is Financial Accounting Standard Board. So just like IASB, we've got FASB, that is Financial Accounting Standard Board, FASB. Now, as far as IFRS is concerned, when you look at these standards, they are called IFRS and they are IAS. So you'll see in terms of IFRS, they are numbered 1 to 19 as of today. And if you look at IAS, they're numbered 1 to 41. So as far as IFRS is concerned, it got two series. It has got two series. One is IAS International Accounting Standard 1 to 41 and IFRS 1 to 19. But if you look at US GAAP, it's all organized in terms of ASC. That's called Accounting Standard Codification. Of course, we interchangeably keep using the word, accounting standards, but technically they're called ASC, Accounting Standard Codifications. Now, what I want to show you is how the US gaps are organized. IFRS is, organized in very simple literature, IFRS 1 to 19, IAS 1 to 41. But now let's see how the US gaps gets organized. Can you look at this presentation? Can you look at the presentation? I said, the financial statements formats are contained in the presentation of financial statements 205. There is a further segregation on 205 as well. 210 gives you the balance sheet. 220 gives you the income statement. And you can see 230 is cash flow. 235 is notes to financial statements. So what they've done, they've organized the entire presentation of financial statements under 200 series. And similarly, you would notice that there are a total of 200 to 900 series. Like you'll see assets organized in 300. Anytime you want to see any standard related to assets, any standard related to assets, you go to the series 300. You can see they've got cash and cash equivalents, receivables, investments, inventory, PPE, etc. Liabilities is all organized in the series 400. So you can see 200 is on the presentation. 300 is on the assets. 400 is on the liability, and then you can see equity is 500. And then there is all about revenue, that is 600, all about expenses, that is 700. And trust me, it is easy to keep this in mind. I'll tell you how simple and classifying example of organizing data. 200 series is on the presentation, and then comes asset, liability, equity, income, expense. Get the point? I think, let me share the board. And it's very easy. You need to know, as a professional, you should be knowing this as well, that how US GAAP is organized, considering that most of you are doing CPA. So I think it's important to give you the introduction on that part, that the data is being organized. The data is being organized in terms of, when you look at the presentation, then you look at the asset, liability, equity, then you look at the revenue and the expense. I think now you can easily decide. This is more like the balance sheet data. This is more like the income statement data. This is all series 200. This is all series 300. This is all series 400. This is all series 500. This is all series 600. This is all series 700. Isn't that easy? Because if you get into the history, geography of the FASB in terms of organizing the accounting standard codifications, you'll see that it was so much scattered indeed. It was so much scattered indeed that they decided to organize all the information in terms of, series. So if you want to look at any standard which is pertaining to revenue, you go to 600. Anything on the expenses, you go to 700. I think, let's share the screen back again. Let's go back to the FASB website. Then you can see broad transactions. 800 series is considering all the broad transactions. Like, for example, if you look at standards on consolidation, like, for example, if you look at business combinations or even derivatives, fair value measurements, financial instruments, foreign currency matters, all those things which are broad transactions, which could impact a balance sheet or an income statement, any of them. So they are not specific, to any particular document. It's not relating to a balance sheet in specific or relating to an income statement in specific. So broader transactions. Then all the industry specific standards are contained in the series 900. This is, of course, not touched in CPA. CPA would not touch all this particular part. So we can say, if you look at the series in terms of the series number 800, that is on the broad transactions. And when you look at the series, which is on, you can say, 900 series, that is industry specific standards. So the number of standards, the number of codifications they've organized is much, much broader as compared to IFRS. Now, quick questions, friends, to you. Rapid fire questions again coming back to you. Where is the definition? I think the definition is lost somewhere. Isn't that so? You must be realizing the definition is gone somewhere at the background itself. We are discussing something, much larger in picture. The idea is to give you an exposure that you start understanding things from the practical point of view. Rapid fire questions back again, friends, to you. Tell me the name of the body in a short form which is creating IFRS, the body which creates IFRS. And that's wonderful indeed. It is IASB, International Accounting Standard Board. Okay, tell me the body which is creating the US GAAPs. In short, it is called FASB, that is Financial Accounting Standard Board. Wonderful indeed. So when I say IFRS and IAS, are they one of the same thing? In terms of IFRS, when I say IFRS as well as IAS, are they one of the same thing? Yes. But in terms of US GAAP, there is something which is called, the standards are called with a different name. What is that name? ASC, Accounting Standard Codification. Now I'm going to give you a term. You need to decide the series. You'll have to tell me the series in this case. Okay, let's talk about revenue. I know it's a little difficult to remember so fast, but that's great. 600 is on revenue. Wow. Industry specific. And that becomes 900 series. Wonderful indeed. Presentation of financial statements. And that's 200 series. Wow. That's superb. Okay, let's look at now balance sheet assets. That's right, it's 300. Equity. Equity, that's 500 series. That's wonderful indeed. And then I am looking at expenses. Then I'm looking at expenses. That's 700 series. That's wonderful indeed. And finally, I'm looking at broad transactions like business combination, consolidation, etc. That's 800 series. Brilliant indeed. That's wonderful. I think that was rapid fire, rapid answers indeed. Super. Okay, so I think my second element and indirectly my third element also gets answered as well, because I have now given you the inputs in terms of where the formats are given and what kind of guidance is given. In fact, the discussions on the formats and the guidance is penning down to the same thing. Because when I'm saying that the formats are contained in the guidance, so I've already given you the guidance is given in terms of gaps. So I think if we just connect the dots in terms of financial statements, if we just connect the dots in terms of financial statements, we can say in terms of financial statements, I've given you the elements and we've understood that there are four elements. We've understood that the formats are given. If we talk typically in terms of US GAAP, it is given in the ASC 200 series. I'll put it as ASC 200 series, presentation of financial statements. Though for different components of financial statements, for different elements, you've got 205, 210, 220. So typically, I would say it is 205, it is 210, as well as 220. And when you look at the guidance is given by FASB. The guidance is given by FASB, Financial Accounting Standard Board, in the form of ASC. Shall I give you a little more knowledge? You can say no. You can say no. You should say no at times as well. I'll tell you one more thing in life. I'm a very dangerous man. Sometimes in a good mood to give more technical knowledge, and sometimes I may go overboard as well. So you should learn the art of refusing me as well. So I think I got a couple of yes only. So many people have abstained from saying that, yes, sir, we don't want more knowledge at this stage. Okay, so I think that's only a 4, 5 couple of you who said more knowledge. Okay, so let's drop the idea that in that case, let's not give you something more at this stage. As the moment I say that, you people started saying, yes, yes, we want more. Okay, then let's give you a little more as well. This is again for your knowledge perspective only. And Saket says, so you seem to be interesting at least today. No worries, you'll find me interesting, in the coming sessions as well. I assure you that. That was quite a good one indeed. That I'm not being sounding too dangerous as of today. I might sound here, at least, in the terms of basics, one can't really sound dangerous as well. The scope of sounding dangerous is also pretty less indeed. Okay, but I think I'm enjoying the journey today. I always enjoy the journey in terms of understanding things. That's because you're teaching as an art and not as a job. Thank you very much, Rakesh. That makes my day. Thank you very much indeed. Okay, we've got a lovely audience today. Whenever FASB wants to make any amendments, because accounting standard codifications is not something which is not going to undergo a change as well. Because as professionals, I would also request and advise you that, since you're entering the arena of, professional courses and all, it is always good to keep yourself updated as well. And you can see that there are a lot of updates which comes in. So when FASB wants to make any amendments to, you can say, the codifications, When any kind of amendments are required in terms of the codifications, they are done with the help of what is called ASU. That's called Accounting Standard Update. That is called Accounting Standard Update. So even if you search the Google, you'll see quite recently accounting standard updates have been issued. For every accounting standard codifications, these accounting standard updates are issued. So they bring in that, okay, we are planning these kind of amendments to the accounting standard codifications. And after the approval of these accounting standard updates, they are incorporated in the relevant ASC itself. So first of all, they're bringing these amendments in the form of ASU, there is accounting standard updates. And then once these amendments are, approved, and in that particular case, they are amended within the ASC itself. So you'll see, keep reading. When you keep reading material, you'll see a lot of amendments comes in. Okay, so we can be in touch as well. Of course, I'll leave my number today as well. We can, of course, be in touch. We can be in touch on through WhatsApp as well, and even on LinkedIn also by my name itself. And I'm sure you're not going to forget my name as well, because my name is a little unique as well. Because I always, put my name as KB, and KBC has been a very famous show as well. And when I started teaching, I also, initially kept my name of the sessions also as KBC, that was called as Kapileshwar Balla classes at the time. So I think that's something unique which you will remember as well. So we can definitely get connected, because in these particular cases, these amendments and all those things, you can keep reading them as well if you want to get abreast with the latest inputs in terms of years gaps as well. Anyway, that was one more inputs in terms of things. Okay, so I think I've answered that element. I want to now go back on the definition, because there are some few things which are still to be connected. I think let me just complete back my definition and come back. I think I've done a lot of discussions on the different aspects, but I think one or two inputs are still pending. Now, since we started a journey with the definition, at least give it a closing end. So when you say accounting is an art, now you know that accounting is an art. Why is it an art? Because it is a blend of rules and principle. And since it's a blend of rules and principle, it requires you to apply a lot of judgment as well. Can you please share your Telegram group name, sir, to keep connected? I'm not really too much active on Telegram, actually. But you can definitely connect me on LinkedIn, or you can connect me on WhatsApp. I'll give you a number as well. I'll share my number as well. Okay, so then it says it's the art of recording, classifying, and summarizing transactions and events in a significant manner. I've already given you significant manner as well, because when you say significant manner here means that you're doing the accounting in a certain sequence, and we've already discussed the sequence in terms of journal, ledger, and a trial balance. Now, the last two bits of the information is which are in part at least of a financial character. Trust me, accounting captures only what can be expressed in money. What can be expressed in money. Accounting captures only what can be expressed in money terms. If you cannot express anything in monetary value, it is not captured in accounting. I think let me ask you a very basic example and get your insights on that. Let's say if a government gives me a land free of cost. Let's say a government gives me a land free of cost. In this particular case, do you think it has got a monetary value? If the government gives me a land, let's say free of cost, do you think it has got a monetary value? I am getting some blended answers of yes and no. The answer, of course, is yes. If the government gives me a land free of cost, it is definitely got a fair value. It has definitely got a fair market value. That's right. So you can always express that in monetary terms. Yes, there might be certain transactions which may not be expressible in monetary terms. So for those transactions, of course, we cannot record them, capture them in accounting. But if you can express, because those items have got a fair market value, certainly they will be captured in accounting. And last but not the least is accounting does not end at the stage of just making financial statements. It also involves the application of, you can say, interpreting the financial results, and that is generally done with the help of techniques which is called ratio analysis. So ratio analysis is one of the basic principles, you can say one of the very basic tools with the help of which the financial statements are, you can say, evaluated. So what are we going to cover in terms of accounting is going to be starting with accounting terminology, moving from the accounting terminology to the art of making a journal, ledger, trial balance, giving you little inputs in terms of how financial statements are made, a little, etc., etc. And that's how a journey on basic of accounting will be done. So today was the day which I just wanted to give you a little framework of accounting, typically for those who know accounting as well as for those who are learning accounting for the first time, so to get started in terms of at least understanding what accounting, what kind of framework is there in terms of typically, use gaps, because you're typically doing a CPA. Right, friends. So I think that brings me almost to the end of my inputs. I think before I close, I'm just sharing my number as well on the chat box. We can be connected on this number. I am on the WhatsApp on this number as well, on Telegram as well, but generally, you can be connected on this. So I think now it's time to put questions back to you. So if anybody has got any questions at this stage, you want to ask me any questions, any concern, please feel free to ask. So will you be sharing these notes later? Yes, I will share the notes, not a problem. I'll mail them across. It will be shared to you. It will be uploaded on the LMS. Okay, so I think there seems to be no further questions for the day. I think I didn't do much technical discussions as well. So can you be available on LinkedIn? I am. You can search me with my name. I would be on that. It's 98994735. That's right. Yes, that's the complete number. You're most welcome. Right, friends, so it was wonderful interacting with you today. Looking forward to the next session on Thursday morning. That was a great start for many of us. Thank you for great beginning. Thank you, Rakesh. Thank you very much indeed. That is a pleasure. I think it's wonderful interacting with all the wonderful audience out here today. So looking forward to the journey. I'm going to seek you. Thank you indeed. A good session. Thank you very much indeed. Thank you all of you. So I'm going to see you on Thursday morning. And thank you very much. Enjoy your day. Thank you very much indeed. Thank you. Thank you so much indeed. Have a good day.